Hey, what's up everyone? Welcome back to the Stock Estate. In today's video, we're going to go over the top 3 swing trade stocks for this coming week. Keep them gains coming, keep them losses short. Alright, so this week I'm going to talk a little bit more about last week's picks, alright, some of the ins and outs as well as the updates and my thesis, alright, so that you can stay updated. And this is the advantage of this channel itself, where we keep up to date with last week's picks and as well as give you new picks for the week. Okay, if you take away nothing from this channel, at least you're able to take away some of the technical analysis skills that I explained in the breakdown itself. Alright, so without further ado, let's jump straight into last week's picks. Alright, last week's picks, okay, we talked about LPI. Oil industry is rallying massively right now. It's crazy. It's honestly really insane. LPI is one of the picks. Alright, we talked about it around here. You can see when we said buy when Monday open. When it bought Monday open, it racked up massively. Around $88, right? I took some profits around $86 because what did I say, right? Every time when we are up, all right, let me just type it down here where we are. Okay, so this is my own how do I put it, all right, mantra that I use myself. Okay, most of you can edit this to your own liking, but this is a way that I use to manage my risk as well as take some profit off the table when I have a huge gain already. Because sometimes the company that we are trading or investing in, right, they have a massive good day due to news, due to insider buying, and most of the time people will be taking profits along the way. So you might want to take half the profits to secure some of that and write the rest of it out, okay? Because it'll be quite painful to see this massive increase, but it didn't hit your price target and it just reversed all the way back down to your entry price, right? So in a sense, you are missing an opportunity. So for me, I know there's opportunities rampant in the market. You must be someone that knows that there are plenty of opportunities in the market, right? You can always take that capital, move it to somewhere else, all right, and generate more profits there. Okay, so again, my mantra is if a certain trade that I'm going on, right, most of the time you can see over here, right, when this gap from here, $77 to $93, $94, right, that most of the time is around 20%, 30% profits. It's a lot of profits, right? And it's not a guarantee that you'll definitely hit the top over here. So definitely we want to secure half our profits when it pops up to 7%. I find 7% is a sweet spot where most of the companies, when it hits the 7%, okay, most companies will not be that volatile to fluctuate more than 7% and being able to sustain that rally without having a dip. So again, that's what my thesis is when taking 7% profits, half my position out when it hits that 7%. All right, so that's what I did, right? I take 7% out and we rallied back, okay, and in kind of having a selling pressure back to my entry price. So I'm currently half position, 7% up on this trade itself. Half of my positions are still in around the entry price. I'm waiting still for it to go to my eventual price target of around $93-ish right there. And my stop loss is still below, not being hit yet. Alright, so that's for the LPI, alright, the trade here. I hope you learned something about that. CNDT, similar story, alright, when it popped up, alright, it took some profits, then now it just come back down again. Okay, so that's a very similar story for last week. I hope you guys learned something about that, about taking some profits off the table when needed, right? Alright, EVRI, similar story, okay, we almost hit our stop loss. My stop loss actually a little bit lower due to the ATR, okay, but it's somewhere here, alright. Popped up massively, took a little bit of profits, and then it's kind of like I would say this is the loser of the week. Okay, it's kind of low right now, right? If it breaks down, you have a breakdown further below. Okay, I can see it going down to $20. So again, I want to set my stop loss here. If it breaks, I might want to re-enter at $20 if there's a bounce for EVRI. Okay, so that's for the last 3 companies for last week. All right, gambling sector EVRI. Okay, I can see that there is some potential there if the sector manages to rally up again. This coming week, all right, let's talk about some companies, right? Some delicious companies that we want to, swing trade. Okay, first company actually I want to talk about is Rmbs. But this company, I will not touch it first. It has very good potential to swing to the further upside to $25 from the current price point. But what happened, right? Earnings, okay? Earnings is coming on 29th October, okay, 1st November, sorry. 1st November, so Monday open, there will be a earnings, and we never want to hold through earnings. So most of the time, if you want to play this company, probably you have to play a post-earnings run-up or a post-earnings dip. So if post-earnings, huge, massive overreaction followed by a, so example, right, huge, massive overreaction, then followed by a reversal, okay, then that will be a pretty good entry price for us to swing to the further upside. So again, it all have to see what happens during earnings for Rmbs. Rmbs is a semiconductor company, all right, small market cap, $2 billion, all right. I think there's a lot of potential for this one, but again, I'm not going to be entering this one because I have to see what earnings gives us on Monday open. All right, second company we're going to talk about is CHS, Chico Fast. Chico Fast is a small cap, really small cap, I think under $1 billion. It is a retail company. Retail company have been coming up back lately as the year-end season, October to the December period, a lot more of the influx of funds are coming back into the market, right? So that is where we can see that it hit a bottom, certain bottom at $4, $4.50, all right, and it's kind of rallying upwards here to reach its eventual price target of $6.70. So how I play this, I'll enter somewhere a little bit lower. Okay, a little bit lower. Right now, it's still a little bit overextended. Okay, if you go on to the 4-hour chart, you can definitely see it's a little bit overextended. So I'm going to zoom in. This is around here. My stop loss will be below the swing low over here. Eventual price target somewhere around the top here. Okay, that is a 2.6 risk to reward ratio. Good enough for me. If you want to go to the lower time frame to improve our risk to reward ratio, go to the 4-hour time frame. You can see that right now it's a bit overextended. You want it to pull back down to the 20 moving average. So again, I'm going to move my entry price right here. Okay, so this, you can set a limit order here, okay, so that when it hits this price target, you will enter. Or if better yet, right, if you can enter manually, that's even better because you can actually see the price movement. In case it gaps down massively, right, then you might want to decide upon whether you want to play this as an overreaction play or you want to enter at a better price, or if it breaks down too much to the downside, right, then you might want to reevaluate this company or play another company. So this is the exact price target, right? I'm going to enter around $3.30 if no massive gapping up and down happens on Monday. All right, and price target will be around $6.40. Stop loss around $4.73. All right, so this is the rough play we're going to play for CHS. And second last company, right, we're going to talk about is SKX, Skechers. Okay, this is a footwear company. Earnings came out, okay, around this time period, right? Earnings came out. And it was a decent earnings, but it spiked up massively to $50. Then slowly, people start taking profits, and it's back to square one around here again. So there is good news about this company. So that's good. Earnings is good. So there could be people re-entering the market to buy this company if they showed a little bit more strength and support around the $44 level. So how am I going to play this? Okay, I'm definitely going to enter somewhere around here. Right now, the CCI index is a little bit overextended, so I'm just going to buy here. Okay, depending on how aggressive or a conservative investor are you, if you are holding it for a longer time period, a stop loss, you might want to put down the previous swing low over here. But this is a very big stop loss. It's an 11% stop loss for a longer term trade. But if you are a very short term trade, that means you trade weeklies, alright? That means you hold a stock not more than a week, a very short term kind of trading. Then after that, you want to set a stop loss a little bit lower, okay, somewhere around the previous swing low over here, maybe around here, right? 5% stop loss. All right, and your profit targeting area would be somewhere around the upper band over here, which is $7.85 of profit. All right, which is a 17% increase. All right, profits over here. So you can move it over here so you can see a little bit more clearly. All right, profit taking area around $53. Right. Again, so when it goes up to 7%, right, around here, right, this is where you can start to take your first level of profit already. Okay, let me just draw it out for you. Okay, this area, right? So this area is where you want to take the first level of profits already, because first, there's a lot of resistance here. Secondly, it hits my criteria of the 7%, all right? 7%, where's my 7%? All right, 7%. Oh, haha. 7%, baby. All right, 7%. All right, so 7%, you want to take first profits. Then after that, the rest of the shares, you want to ride it up to the top. And you might want to exit anytime if you feel that this stock is kind of stagnating, price action doesn't really look good. You want to move this capital to somewhere else. Okay, so this is how I'm going to play SKX. Okay, this is the trade that I'm going to be looking at. And this is the footwear industry. Last company I'm going to talk about, right? We did the last stock already. Thank you for staying for me to the end over here. Okay, I hope you guys really enjoy the content. All right, please drop a comment, drop a like, drop a subscribe. It really encourage me to put on this weekly content for every one of you. Okay, because it is something that really helps me and this channel, to know that someone is watching my content, really enjoying my content, alright, and you put a smile on my face. So don't forget to comment down in the sections below, alright. Any questions, anything you like, okay, or just to comment, just to let me know that you're there, alright. Thank you. Alright, so last company we'll talk about is SKY. But before we get into that, alright, I'm just gonna answer a quick question for my subscriber, alright. She asked, hey, stock estate. Okay, let me just write the text over here. What is ATR? Okay, ATR is basically a indicator, right, to show the daily fluctuations in the price movement. Okay, the average true range is the average of true ranges over the specified period. Okay, ATR measures the volatility, taking into account any gaps in the price movement. Typically, the ATR calculation is based on 14 periods, be it intradaily, daily, weekly, monthly. Alright, so when we're looking at ATR, right, ATR, okay, so if you look at the daily ATR, basically, what does ATR mean? The ATR means, right, it calculates the top over here. Let me just give you an illustration over here, right? Boop. Okay, so if you talk about ATR for one day, right, for this particular day, 27 October, right, the ATR is $64 minus $61, right? And that is the total amount, which is around, I would say, 15%. Alright, my bad. It's around 5%, right? 5%. Okay, so this is the fluctuations, right, that happened on that one given single day. Alright, let's move on to the next one, 26 October, right? Here to here, how much is this? This is 64 to 62, alright? This is a certain percentage as well, alright? Probably around 3. Okay, so this is a daily fluctuations on 26. So ATR over 14 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, over 14 days, right? The calculator will take all 14 days, add them all out together and divide by 14 to find the average fluctuations in price. And that's basically an ATR. Alright, so if we look at ATR of 14 days, alright, we want to find the average of the fluctuations so that we can roughly know, right, that the daily fluctuations will not exceed, will not exceed 1.5 or 1 or 2 of the ATR. So if our ATR is 2, let's get it here, ATR, right, let's say our ATR is here. Okay, so if our ATR, we're going to put our ATR 1.5 from here to here. Here to here. Okay, maybe around here. Okay, so you can be sure that, 1.5, right, these candles in a single day will not, most likely, high chance that it will not fluctuate or spike out of this area itself. So again, so that this is to ensure that when you put your stop loss and you are putting it at 1.5 ATR, you will not get easily stopped out of your trade, right? Because it won't just massively spike up one day and take out your stop loss immediately, okay? It will happen over at least 2 or 3 or 4 days. So that you have time to prep, if you see that, that the trade's not really doing well, you can even exit early, so that the stop loss is just there to protect your downside instead of there to, get stop hunted, right? By the big institutions. So that is what ATR is for above. Okay, if you don't know what it is, still don't understand what ATR is, alright, you can replay this part or even go online to some resources like Investopedia. They do a much better job at explaining that than me. Alright, but if you get what I'm saying right here, right, that's good enough. Okay, so last company, this is Sky, alright, this is just nice. This is a company that I'm going to talk about. Okay, I'm just going to zoom back. Sky, alright, Sky earnings is coming soon at 3rd November. So this is a company that I might play post earnings again. So I will wait until 3rd November when they have a earnings call, and if they have a good earnings, right, and it rallies to the upside, break up to the upside, and that's where I would start to play this as a momentum play to swing to the upside. Because Sky is a really good company. I checked out its fundamentals, but right now it's trading in a range because they are waiting for earnings for them to, decide the direction of the price. So earnings will provide that push to the upside or the downside for this company. And yeah, so that is what we want to play for this coming week. If we want to play Sky, we want to wait until 3rd November before we make a decision. So that's it for the top 3 swing trade stocks for this coming week. And I hope you guys enjoyed today's video. Drop a like, drop a subscribe, everything else, all the good stuff, right? And I shall see you again in the next video, everyone. Stock Estate out.